What Your Bank Doesn't Tell You, a podcast by You Mushroom.
Hello, everyone, and welcome to our podcast, What Your Bank Doesn't Tell You. Today, we are going to continue build upon our new series, which we started back then in August, called Make Investing Your New Habit. And we are having again Laura as guest.
Hello, thank you for having me, Luba.
And today the topic would be how to strengthen this new habit. For those of you who remember this episode, it was episode 12, I believe. We built up an ETF portfolio, Laura built it, and the idea is to give you regular updates of what's happening with this portfolio, and this is a portfolio run by Laura. So here's my first question, Laura. How is the portfolio doing?
Well, given that we had some quite turbulent months since August, the portfolio has since inception minus 2.62%, so I'm slightly in the minus. I invested in it plus minus every month, and I try to keep the balance between those four ETFs that they're plus minus the same weight. Of course, at the moment when you look in it, it's not quite every ETF has 25%. That's due to the size of each fund or each ETF to buy. So I really try to balance it out over like 2 months. That it makes sense to buy, and also with my buying power, to balance that over every second month.
That's great. That's a very clever strategy because you don't want to be dependent on the market timing. For those of you who are listening the first time, Laura, would you tell us what you have in a portfolio?
Yes, certainly. I have 4 ETFs, and you can see them on You Mushroom. It's visible for everybody, so I would be very happy if you check it out. It's called ETFs Investing Habit, and I'm sure we also can link it to the podcast here. So as I said, I selected in August 4 ETFs. I have one with SMI titles in it, so a Swiss-based fund ETF. Then I have one ETF with S&P 500, so more the US in it. Then I have FTSE Emerging Markets, which is more, as the name says, already have covering the emerging markets. And then I have the Eurostock 50 to have the European countries covered in it. So those are my 4 ETFs which I have.
That's a very good strategy, and this is considered a very good diversified portfolio. And Laura, would you elaborate why that portfolio is so good diversified out of the geographies? Because obviously we have a geographical diversification.
Yes, well, when I look now at it and see the performance which happened, that's also kind of a question I have to do, or I brought with me today to ask you. I saw, for example, that the SMI over time or since inception is the ETF which is lagging since August a little bit. And then I looked in all the fact sheets, and you can also find them on You Mushroom. You can just download them. And I looked also in the sectors in which I'm invested with those 4 ETFs. And it's quite astonishing. So, for example, we take the SMI as we're home in Switzerland.
Very quickly, for those of you who are listening, SMI is actually the Swiss Market Index, which is representing the 20 biggest companies in Switzerland, just for those of you who are beginners.
Yeah, thank you.
No.
And I'm very well diversified in different companies, but when you look at the sectors in which they're invested, that's quite, or surprisingly also for me, like 40% is healthcare.
That's a lot.
And then consumer goods is like 23, and the biggest positions in there is, for example, Nestle with 17% or almost 18%, then Novartis and Roche. So I just realized then, well, the SMI is a lot reliable on those 3 shares, right? Mm-hmm. Even though I'm very well diversified, those 3 shares are the ones who have to perform the best in order to also perform there. And maybe that's also a question for you. And also I looked at the other 4, and there it's very similar that it's for example, the S&P 500. There we have information technology with 28%. So all the tech companies are way higher weighted than everything else. So those have to perform very well in order that my ETF is also performing very well. And yeah, my question is, for me, year to date, the SMI has staggered a little bit. So it's plus minus around no real performance there.
It's flat, yeah.
It's flat, thank you. And why is this so? And for example, the S&P 500, I looked it up. It's way better. It's like almost 19% year to date. Can you maybe elaborate that a little bit for me? And also elaborate for me, is it really good to be in 4 so different ETFs diversified that, I mean, my SMI ETF is taking a little bit of the profitability of my S&P 500 fund or ETF, right? So is it really good to be invested so also in so different markets?
So this question is a very valid question, and this is one of the reasons when we invest actually in ETFs that we also have a deep dive into the fact sheets and see in which sectors an ETF is mainly invested, what's the breakdown, and also which are the leading companies, as you just did, by the way. And for those of you who are following closely the markets, for example, this year is the year of the tech stocks. They were the drivers of the performance of S&P 500 and obviously also of NASDAQ. And that's why you see such a high performance of almost 20% year to date. SMI, on the other side, is actually invested in stocks which are rather defensive. Tech stocks are cyclical. When the economy performs well, tech stocks tend to overperform. But healthcare is actually anti-cyclical, it's more defensive. And you could say that this year, healthcare is actually not performing that strong as it used to perform in previous years. 2022 was the other way around. 2022, you would have the tech stocks being really punished by the markets because it was a very troubled and uncertain year. But then again, the only sectors which performed were the defensive ones. Those were utilities, and because of the crisis with Ukraine, obviously also energy. And now we are in a year which is actually a growth year, and you could see every index which has actually overweighting of the tech stocks, these are the classical cyclical stocks, actually really performs well. And indices which are more defensive don't perform that good. SMI belongs to those type of indices.
Ah, okay, that's very interesting. So apparently, or I did a very good selection to have cyclical ETFs or indices in my ETFs and non-cyclicals, right?
Yes.
So to have but it is good to have both.
Correct.
In it, to have both upsides.
Correct. And actually, if you look at your portfolio, if we would run it from the beginning of the year to date, you will be around 9%. That is because, of course, you give up some return, but also in other years, you would not be punished that strong by the markets because you would always have a sector who will be pulling with you, of course, if it's not a very turbulent year. So diversification may cost you some performance, but it also gives you stability and it buffers losses. In that sense, yes, indeed, you did a very good selection.
Thank you very much for this. I wasn't that aware that that's really very important. Another question I have, I highlighted and I really did this sector breakdown, and the Eurostock 50, for example, is the only one where consumer discretionary goods like
Louis Vuitton,
for example, is really high and has a difference, whereas as we heard yet, and in S&P 500, in SMI, and even in the FTSE emerging markets, we have technology and financials very high. How can I ensure we hear also financial markets, they had a lot of trouble this year, right, all over the world. How can I filter that, or what do I have to be aware of when choosing an ETF? That maybe I'm not only investing in financials. Is there a way also by applying filters maybe to not only invest in the well-known and biggest indices indices.
It's a very complicated word in English. It's a tongue breaker. Yeah.
Indices, or how would you go about that?
So it depends what you want to achieve. If I want to, you can actually, the way I would go for it is, if I want to really set up a very traditional portfolio which follows the most liquid markets, I would really go according to the geographical indices. And I would be mindful exactly of those pitfalls which you just mentioned. I would really look into the fact sheets. You can download them on your Mushroom and see what is the sectoral exposure. And see, for example, if I invest in the USA, be aware in the broad indices, it's technology. UK, by the way, used to be energy up to last year and probably even up to today. Europe, the big 50 stocks are actually, as you say, consumer discretionary because of the two big luxury producing companies in Europe who are very prominent in pole position in the index. We are here home turf are actually more healthcare, very natural, and Novartis and Roche. So you would also look at select the countries where you feel familiar with, and also next step, look in the industries which they invest into. If you want to go into more niche indices, then you will need to, what you will do is basically type a keyword on your Mushroom and see what kind of investment suggestions come. So for example, if you want to invest in certain sectors which would be rather won't belong to the largest ones, that would be the best way to search. And then further with the filters which we offer, you can indeed tailor and search. Do you want these sectors to be assigned to specific geography? Do you want these sectors to be assigned to companies with certain size? There is another different type of investor, for example, who would prefer small caps as opposed to large caps. That's also a very valid strategy. And in Switzerland, by the way, this type of strategy to invest in Swiss small and mid caps used to be incredibly successful over the past 20 years. So very valid question, use the filters. If you're more the type of person who will distinguish companies according to size, you can do that on your Mushroom. You can limit the maximum, the range of market capitalization according to your preferences. If you want to search for specific keywords like, I don't know, brain technology or water, if you want to invest in water, you just type in the search the respective keyword and then it will come structured.
Okay, thank you very much. You elaborated that very well for me. I have another question to the SMI, and I mean this 2%. I mean, for me the question is, we heard in the SMI there are a lot of different companies in it, right? Yes. But those three biggest, as I mentioned to you before, really did the difference. And can you elaborate, because I know, for example, smaller companies, they had a really good performance this year, but it's really not showing in my ETF at all because they're so small compared to those three bigs. Can we maybe also see year to date how those three really performed this year?
Yes, that is something which we are happy to show also on the platform, and have a look at that. For example, like we looked into the top drivers of SMI, and as you say, those are Nestle, Novartis, and Roche, and you could easily see that actually year to date, Nestle has roughly minus 7%. Roche has lost actually quite a lot, 20%, and you could see that actually Novartis is flattish up to 3%, depending on the day when you're doing the inception. So you see that actually top 3, top 5, top 10 positions, which we reveal on your Mushroom, may have a substantial impact on the whole performance. They actually drive the performance of an ETF.
Yeah, and I see on the screen that that you really can compare those, and I think that before investing in an ETF, it would also be very interesting, like to dig them deeper and compare them, right, to really get a feeling what you're having in your portfolio. And I certainly will do that. For SMI, I did that already, but I'll definitely do it also for the others, to really understand and strengthen my habit on investing, to see that what is there, to make myself aware. Because sometimes after 4 weeks, I really had to look again at my portfolio and look at the positions again, because sometimes I already forget, why did I choose that? So it was really helpful for me that I already put my strategy in there to understand it myself again and take it up and invest further and understand also the performance there.
And that's a very valid point. When you start investing, you actually naturally start to developing the interest what's happening on the markets. And I remember maybe a year ago, before we started really setting up real portfolios, you would not be leading this type of discussion, right? Because you hear in the news somewhere on the back of your mind, something's happening on the markets and some stocks go up, some stocks go down. But because you don't have, as we call it, skin in the game, you actually don't follow it that close. And strengthening habit means actually staying regularly in contact with the topic. By the way, one very interesting remark, speaking of SMI, that's another parameter which we would warmly recommend to you to consider, particularly when you do the comparison and have a look at the screen again. You see what's typical for Nestle, Novartis and Roche, the three of them actually pay quite high dividend, right? Nestle pays roughly 3%, Novartis pays almost 4%, 3.75%, and Roche pays 4%. So those are very well mature, stable companies who are rather what we call in finance actually cash cows, or as opposed to the typical growth companies, which would be, for example, a Tesla, which pays zero dividend, but you have a huge upside performance. Just to give also this dimension.
Yeah, that's a very valid point. Well, thank you very much. I think that was a very good recap for my side, and to keep going into the next year. I will definitely, I think I keep my portfolio as it is, and then hopefully see you soon again, or talk to you soon again, and see another update on it. And I'll sure bring some new questions with me.
Looking forward to see what your portfolio is going to be doing in some few months. And thank you very much for this very interesting and insightful talk.
Thank you, Luba.
Goodbye. Looking forward to see you again. And if you have any questions, don't hesitate to put them either in the comments or write us to at hello@youmushroom.com. We are looking forward to hearing from you.
Money! What Your Bank Doesn't Tell You, a podcast by You Mushroom.